Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference. And joining us for this segment, we have Bruno, who's the Chief Investment Officer with IndexIQ ETFs. And we're going to discuss going beyond market cap weighting. It's great to see you as always. Welcome back to Trade Talks.
Thank you. Great to be here, Jill.
Tell us about some of the distortions that you see in cap-weighted equity indexes.
Yeah, so they get the headlines, the big names get all the headlines. They dominate the market cap-weighted indices, and so they really help to drive the performance of those. But there are significant opportunities if you go a little bit deeper and dig beyond the top-weighted names. So, a few statistics. If you look back over the last 3 years, the correlation between the size and the return is only about 40%, which means that there's actually a lot of going on underneath that you have to dig a little bit deeper. And in fact, when you start looking at the US large and mid-cap segment of the marketplace, and you rank them by valuation, you find they're actually cheaper as you get down to the mid cap and the small cap, which is a little bit unusual. They also have potential higher growth rates, forecasted growth rates. So we think there are actually a lot of opportunities beyond just sort of the top mega cap names. So
it sounds like the fundamental data is more effective than the market cap weight, because it really isn't a reflection of what's happening underneath the hood, to your point,
right,
when you only have a handful of 5-6 stocks driving an index.
Correct. Yeah, and we see the distortions, and that's what happens. And those benchmarks can become very difficult to beat sometimes when you have those names doing well. And we saw the momentum trades and the quote FANG names, right? And those became really dominant and became very difficult to beat those benchmarks. But if you go a little bit deeper and you actually have exposure to some of the other names, there are, we think, opportunities to kind of get into some of those more attractive opportunities.
So are you using like a multi-factor approach to equity selection then?
Yeah, so we think that a multi-factor approach can make some sense, and we'll look beyond just the size. We'll look at things like valuation, we'll look at forecasted growth, and we'll look at some of the technical trends and the sentiment around that stock. So it gives you more of a complete 360-degree view of that stock if you take that multi-factor approach.
Well, I mean, it makes sense, right? Let's say you have a tech-heavy portfolio, right, and you're benchmarked to, let's say, Nasdaq 100, for example. Yeah. If you don't have one or two of those stocks in there because you're looking underneath the hood, that can be really hard to beat your bench.
That's right, if those do well.
Right.
But there are other stocks that actually will perform and have performed better than those top couple of names in the benchmark. So you just got to use a different way to kind of get at those.
All right, appreciate the insight as always, Sal. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.